Hey guys, welcome back. Good morning actually. It is Sunday at 7 o'clock in the morning. I wanted to go through with you guys the fundamental analysis for the week. I'll also be going through my current active trades and going through those two trades, retracing June. June will be a profitable month, and which will mean Q2 is profitable. We'll go through the data. Let's just jump right into the fundamental analysis. So let me just close my door. 1 second. Okay, so this is the 22nd of June to the 28th of June fundamental analysis. Just as per usual, guys, this is not financial advice. Please do your own research when trading, entering the markets. This is purely for entertainment purposes only. COT reporting, actually quite interesting. This is the previous week's reiteration, but essentially 2 weeks ago. But we can see there's been a huge shift in terms of long the dollar. We know there's strength in the dollar currently. And that's sort of confirmed or supported by the fact that these non-commercial traders, these large speculators, are shifting their focus to longing the dollar. So something to note there. Also, we know the inverse, the Aussie right now is losing a bit of steam. So you can see it was previously, I think a month or two ago, it was already hitting 65-70%. Now we have a big swing into the short side. It's tipped in the favor of short now. So again, just sort of backing our thesis up in terms of COT reporting and sentiment being short the Aussie dollar. For the Japanese yen, for the most part, it's remaining the same. I know from an economic news standpoint, we are still quite bullish on yen. From a COT reporting, we can still see it's less of a percentage than the previous week. People are still shorting the yen. So just something to note from a sentiment point of view, from a fundamental analysis, economic readings point of view, I am still quite bullish on the yen. Most of the readings and prints were hotter than expected. So I'll look to sort of long the yen so long as I have a good pairing, such as the Aussie. Now, stock indices, very interesting. We have US 30, which is what I trade, the Dow Jones being ticked into bullish territory now, quite a big swing, almost 20% change into the long side. So quite bullish on the Dow. I will trade it if it gets into relevant zones. Gold and silver, nothing too much to comment on, still remaining the same, still heavily from a long-term point of view bullish. We'll just leave that one alone. Okay, economic news, we had PCE, core PCE being neutral. Inflation reading still shifts bearish, but we can see economic reading and labor market being very bullish. So very bullish to the dollar still when compared to the other assets. Aussie, you can see we got CPI reading cooler than expected. So net bearish on inflation news. We had labor market ticking bullish for this one. So employment change being bullish, unemployment being neutral. So what I see here is I see inflation coming down. I see better labor market data slightly, but I still see poor economic data. I'm going to suggest, as this inflation reading starts being cooler than expected, we start seeing the cash rates or the interest rates do its duty. We'll start seeing this come down as a result of this. So we want to stimulate this portion of the table. By doing so, we can do this by controlling the cash rates while inflation is coming down from what is expected. So in the next couple of months, that's what I'm suggesting. That's where I see Aussie losing its steam in terms of people are starting to sell Aussie, and I will definitely capitalize on that thesis through my trading. Yen, you guys can see just everything's sort of net bullish, so I'm not going to speak too much more on that. I am happy to trade this on the long side against the Aussie. So I've changed my graphs a little bit. I'm trying to make it more simple, more succinct. This is Forex Factory. What I can note here is interest rates coming down, still quite high for the US dollar, but coming down to that 3.75. We have Aussie going up. And again, I'm suggesting if we have poorer economic reading and employment reading, we might look to have that reduced again. Yen coming up, but the interest rate's very, very low compared to these others. So just something to note, inflation is coming down. So what do they want to do with the interest rates? We'll see week by week. From an economic GDP point of view, we can see for US dollar, it has been higher than forecasted for the last couple readings. We did get a big slump down from early to 2026. We had a big slump down and we are climbing back up. For Aussie, we've got a slump down as well from early 2026 to mid 2026, and definitely lower, cooler than expected. So just something to note there. We might be seeing a bit of weakness in this GDP readings from Aussie. Yen, same deal, linearly going up, so it's a good sign overall for the GDP component. So all in all, from what I see here, I see Aussie losing its steam, US and Japan gaining momentum. Employment. So Aussie employment, you guys can see we have unemployment still remain quite high at 4.4. Employment rate actually being better than expected, so a little bit of a good sign here, but nothing too much to comment on here. So compared to the economic indications, so still net bearish on Aussie. So going to my bias, gold, we had neutral CO2 reporting. We are quite bearish, and why we are is, yes, we've got bearish US inflation readings, which is good for gold, but it's so bullish in terms of economic data and labor market data that I am still net short. I'm still happy to short gold in this environment. On the flip end with US 30, everything's pinging long. I'm happy to long US 30, especially with